Hey, good evening, everybody. It's Mike. Thanks for joining me tonight. We have a jam-packed webinar for you guys. Uh, welcome aboard. As you know, every time we do one of these, I try to teach you guys something, try to give you stuff you can walk away and take action on the next day, tell you about the service, and also go over your charts with what little time we have left. So tonight, we're going to talk about trading with stops, and we're going to go over the weekly option flow this week. And it's been kind of a weird week for option flow. So there's a lot to go over. So hold your questions. We'll get through them as we go and keep your charts till the end. As always, you can get a hold of me at mike@alphashark.com, or you can follow me on Twitter at optionsmike. So feel free to hit me up there anytime you guys have any questions. Okay, so disclaimer, day trading, short-term trading, options trading, and futures trading are extremely risky undertakings. They generally are not appropriate for someone with limited capital, little or no trading experience, and or low tolerance for risk. Never execute a trade unless you can afford to and are prepared to lose your entire investment. All trading operations involve serious risk and you can lose your entire investment. No trades are recommendations or advice, and we cannot be sued for loss of capital. All trades are for educational purposes only. Contact your broker or RIA for execution, margin, and other capital requirements. Everyone watching this presentation adheres to all disclaimers from optionhacker.com, alphashark.com, and me, Mike Pisani. So hopefully tonight we're going to teach you how not to take devastating losses. That's our goal here. So we're going to go over trading with stops. We're going to go, we do the sentiment review, where the market's at. We go over how we look here. For option activity this week, I want to talk to you guys about Micron, Qualcomm, Delta Airlines, Harley Davidson's, and Salesforce, and I have a couple other ones we'll go over. But there was some big flow into these names that I think is still very actionable here. We'll talk about the service offering, and then whatever time we have left, we'll go over your charts before we give it back to AK. So trading with stops, guys. Why do we do this? Well, because we're all wrong. I mean, how many times are you guys wrong? I'm wrong on a daily basis. I don't have all winners. I wish I did. I don't. But why let a bad trade become a disaster, or even worse, make you focus on a bad trade when there's other trades to be had? And that's kind of what this is all about. It's cutting your losses before they get bad and moving on to better trades. So why should we trade with stops? We're all going to be wrong, guys. People have told me, and some people are better, some are worse, but if you're batting around 300, if you have a 300% winning percent in this market, you're doing pretty good for the most part, as long as you keep your losses tight. When this doesn't work is when you don't let your winners run and you let your losers run. And I will tell you from experience and from doing it myself many a time and trading with a lot of people through the years, everybody has a hard time letting go of their losers. They always think that bounce is around the corner. It's going to bounce here. It's going to go. Last time I sold it, it turned around and bounced in my face. Well, guess what? If you're selling when it comes down at support, it's going to turn around and bounce in your face. You need to know where support is. You need to put stops in place so you don't have to have the emotion of it, right? Big pain, and you have a lot of emotion. When you're losing money and you're going the wrong way, there's a lot of emotion involved. But if it's a paper cut, it keeps you from having that big pain. It keeps you from focusing on that losing trade that's sitting out there in your mind. Have you ever guys had that one day where you make a bad entrance and you're getting just annihilated in the trade, and instead of taking it off, you stay with it? And while you're staying with it and watching it and fretting over it, there's 10 other trades you could have taken where you would have made the money back you were losing already and more, at that point, right? So put a stop in. It keeps you from having that problem, that emotional loss, and keeps you in the game. And also, you need to have a risk reward in your head. Before you take a trade, how much are you looking to make? If you're looking to make $100, should you be willing to lose more than that? If you're looking to make $1,000, are you willing to risk $1,000 to make $1,000? How much are you looking to make before you go into the trade? And that kind of tells you where your stop should go, right? And roughly what area you should be in. Doesn't make sense to put a stop in down 100% or down 90% on a trade, right? If you're only going in to make up like 10 or 15%. So you got to kind of put these things and weigh these things inside your head. Make sense? Guys with me? You still out there? You awake? There we go. Perfect. Thank you guys. Appreciate it. Okay. So let's talk about, we're okay, we'll come back to that, Abdul. We're gonna go over stops first and then we'll hit up on spreads because they're a little bit more difficult, right? So trading stops with common stock. By the way, there's nothing wrong with trading with common stock off option flow. I know many a successful trader who does it. Okay. So day trades, if you're doing a day trade with common, I do this quite a bit, did it today. I'm usually only willing to risk about $200 on a day trade with common stock. And what I mean by that is I'm not willing to take the stock home overnight. I'm taking it because I think that I can get some movement out of it. I'm looking for $200 plus, and I'm only willing to risk $200. So on 1,000 shares, I'm putting a stop loss in at 20 cents. So let's think about this carefully, right? On stops like Nvidia or Facebook that can move big, that's a really hard task on 1,000 shares. This is where you put your chat in, Nourish, chat in here. So on 1,000 shares, it's tough. So on 1,000 shares on Facebook or Nvidia or Tesla, I may only trade 100, 200 shares. So I give myself time so I don't get instantly stopped out. If the trade really starts working, I always have the option of adding if I think I really have a winner at that point. It's going in my direction, right? But on a stock like Nvidia or Facebook, Nvidia, this thing will move $3 to $5 in a day without thinking about it. And if you're buying at support and you have a stop in below, then 200 shares will give you a nice $600 to $1,000 win. You don't have to do everything with options. You can get some nice trades on this. Other favorites of mine are AMD, VRX, X, Micron. These are all good names that are not very expensive, that have nice movement and are easy to size, right? These names all tend to move well, especially AMD and VRX, and they're easy to trade with common if you want to do it, and they're easier on stops. You can put stops in and not get hit as fast on looser stocks like NVIDIA and Facebook. So that's not a day trade. On a swing trade, I'm going to identify support and I'm going to put a stop in a little bit below that. Because I know algos will go stop hunting and they'll try to go to support and they will overshoot it a little bit. Like that's right. They'll overshoot it and come at you. So if if I identify the 8-day as support, I'm not going to put my stop right at the 8-day. I'm going to go 20 or 30 cents below there because I know they're going to come and try to overshoot it a little bit, right? They always do. You see them do it all the time. They come hunting for it. They want to take everybody out. So you have to give it a little bit below that because the algos come looking for it. On a long-term trade, I'll be honest with you, I tend to let these things run into my thesis trades. I've been sitting in BRM and Twitter now. Back? Hello? Perfect. Sorry, there's a new mic has a mute button on it and I accidentally leaned into it. That's my bad. What was the last thing you guys heard? Yeah, sorry, getting used to it. Long term. Okay, so long term, I tend to let things run until my thesis changes in the beginning. Thanks, Chris. So like Twitter and BioMarin, I love these names. Twitter, I've been in a lot of pain in this name. I started buying it up in the 20s and was adding to it down in the 14s and 15s. I had an average cost down to 19 and I sold half my position today at 21.60. Why? Because earnings are coming and this stock has a tendency to disappoint and I'm not willing to let it all run anymore. And taking a half position now makes sense because if it goes, I'm going to have a nice win. If it comes down, I have the option of adding back if I think earnings were still good, as this stock still has strong support down around 14. BioMarin is a long-time biotech favorite of mine. I'm just letting that go because I think they get bought eventually. So I have different theses on different types of trades. Trades like that, I don't worry about earnings so much. I just keep them. Okay. So here's an example today, a day trading with a stop on Twilio. So Twilio today, I posted in the room quickly, there was a rumor of a buyout. and options were bought right on the rumor, and you could see that nice big red candle. This is this is the 5 minute chart. I'm sorry, green candle, and I let it come in a little bit, and I got to about the 50% retracement, and I filled at 31.60 on 1,000 shares, and immediately put a stop in at 31.40. Guess what? It took me about a minute to get stopped out. I was dead wrong, horribly wrong on the trade. Lost $200, which is okay. But if I hadn't had that stop, look where it went. It closed around 30. So that stop saved me from more pain and anguishing over it all day long. And I will tell you something, on rumors news like that, if it retraces the entire move, they don't believe it. They're not buying it. So when you see something like that, this is where a stop will save you. And I like to play events, news. I've had some of these be huge winners for me before, but today was not the day for it. So you see how that stop worked there? Tight stop, uncommon, 1,000 shares, nice and easy. Not a big loss, manageable. You could have done a couple hundred shares just to see where it goes, because sometimes on rumors, these things will run, and Twilio had room to run to 35 if it wanted it. So I was trying to give it that chance. Any questions on trading stops on common, day trading on common? Ray, I do a limit. Always do a limit. This is trading common here, Brennan. So right now I'm trading common off of a rumor and option flow. The limit is my stop, and then it converts to a market order, right? Maybe in a minute, Randy. I don't have toss up right now. Why didn't I buy the option? Because I find options get juiced with IV, they get spreads get wide, whereas common stays very consistent. And I can put a tighter stop on common than I can on an option once that thing goes wide. So you put a stop limit in that converts to a market order. Yeah, you got a rumor. You had a rumor of a buyout, guys, on this stock, on Twilio. And they bought options on it, and immediately, as soon as the rumor hits and the options get bought, the IV goes nuts, and they start, market makers or don't know what's going on, so they make the spreads as wide as possible because they don't want people going in. So if you go in, you're really going to be paying above the ask to get in because the spread's so wide. And it's their way of getting people trapped until they know what's going on. No, it just signals the market makers have uncertainty, Nourish. They don't know what's going on. Something's happened, and their first thing they do is they spread things as much as possible because they don't want people buying options, or they don't want people getting into options at that point because they don't know what their risk is. Right? So they make them very wide. So if you want to get them, you can get them, but you're going to pay through the nose for them. And it puts the odds back in their favor. All right. So that's trading with common. Yeah, so you put a limit order in, so if I hit this price, I'm going to get stopped out, but the stop then converts to a market, because if you put a limit in, you have to hit it, right? There's always a spread, even on common. So you put the market order at that point so it quickly fills. Otherwise, you can just get stuck in it some more, right? If it's coming down, you can still be stuck in it even more. So my stop is at a limit, and then it converts to a market. TOS has been tough lately, Elizabeth, so we'll get back to that. Do I ever add a common? Yeah, but this is not the, Ramu, this is not the webinar for that. We'll go over that on a different one. I always move my stops around, Larry. So once I get in the money, my stop starts coming up, right? So a $200 stop limit. Once if this trade has started working, I would have started moving in my stock up to break even and then moving it into the money as the stock goes up with it. Until I got to a point where I was either willing to get stopped out or I was willing to say this could really run. I'm just going to leave my stop at a little bit of break even. I'm not sure, Patrick. I'll have to take a look at that. Hit me offline on that one. All right, so let's move on. So let's talk about trading with stops with options. Okay, guys? So day trades, I try to keep my losses under $200. I said try. Google, Tesla, Amazon, almost impossible on some of these names with 10 options. They're wide, right? The options can be very wide, and you can get into a trade and be down $150, $200 before you even have a chance to even see it, depending on where they fill you. So 300 to 500, sometimes more reasonable on 10 options. Sometimes I don't trade 10. If I'm very unsure of anything and I just want to take a feeler, I may do 1 or 2 options on those names. Just put it out there to see what it does. This keeps me in the game so I can give it a chance to work, right? Especially in a market like today where the market was it was just kind of blah. It was kind of just, an inside day and lots of moving around. Try to buy at support. Try not to chase candles. If you're chasing a stock on the move, you're going to be paying it up, right? When you see Google or Amazon or any of these beta stocks moving or anything moving, the market makers narrow the spread and you're going to get filled close to the ask, if not right at it. If you're paying the ask, it's very easy. If the stock pulls, they widen them, and the next thing you know, you're down quickly. So try not to chase candles. When you chase candles, you typically get yourself in trouble. You want to be buying when the stock is not moving, when it's quiet and it's at support, not when the thing's raging. On a day trade with options, once you get green, get a stop in place. Don't let it go red. These things move quickly. They are leveraged instruments. If you let it go red and this market turns against you, you may never get it back as if you're trading on a day trade. So keep your stops tight. You can always go back in, right? Options are not like common stock. They do not have a period of 3 to 5 days for it to be resolved. The money's instantly refunded to your account. It's a contract, and you can trade that money again within a second. So don't be afraid to get stopped out and go back in. Yeah, it costs a little bit of commissions, but commissions should not be your major concerns. You should be making money and making sure you don't get your head handed to you, don't lose money. Okay? So when a stock drops, delta is working against you along with theta decay. So when you buy an option and the delta is, let's say, 40% at 40 cents, and it starts dropping, that delta is working against you. You're losing 40 cents as it goes down. As the delta starts, then the delta starts to drop as the stock goes down, right? When it starts to come back up, instead of having that big delta working for you, you have less delta now. You have decay taking in. So often when you get back to where you bought the option, when the stock gets back to there, you will be red. So that's why you really, on a day trade, want to make sure you put in tight stops. Elizabeth, yeah, it is affected by the day trade pattern rule, but if your count bounces under 25K, so you can still, it still comes right back into your account. That's a good point. It's not a losing battle, Nash. You just have to learn to buy at support and not chase. Okay. Sorry, Elizabeth. If you have a cash account, I do trade on I do have a margin account, but options don't trade on margin, so it's irrelevant. I always have everything refunded back to me instantly in my accounts. It's not a losing battle, Narish. You just have to make sure you're playing in the right direction, right? So the idea of a stop is to make sure if you're wrong, you're not going to take a big gash. You're going to take a paper cut. And that's what we're all about here. It's not taking big gashes, but taking paper cuts. So on swing trades, I put a stop in just below support. So a short-term swing trade for me, I'm looking for a 20 to 25% max loss. So if I identify support, my stop will be maybe 20% below there. On a long-term swing trade, like some of the ones I'm in right now, which are like Lulu and Palo Alto Networks and Yelp, my swing trade will be a max of 50%. Now that I'm green on all those trades except for Palo Alto, I've moved my stop loss right up to break even at this point. Okay. Put this in as a good to cancel with the buy at the 50%, and then start moving it up as you get into the money. Otherwise, you'll forget to do it. If a stock option drops by 50%, you're going to have very weak delta. Even a huge move now is not going to be able to get you back to even. You're going to have to either add to it or really pray that this thing runs. And while I will add to a losing position on occasion, it's one of my least favorite things to do. And I only do it when I have a very good thesis and a lot of conviction about a move. So again, think about some of these things. 50% max loss on a long-term swing trade. Put your stop in right away. Avoid disaster. So on Google, I've seen Google spreads $1.20 to $1.50 at times and then go as low as 20 cents. Tesla is typically about 20 cents on the spreads and sometimes as high as 30 or 40 or 50 cents. It depends on what's going on with the stock at the time, Samir. So you have to look at it and see it. If you watch it, my advice, if you're not used to playing with these names, watch the spreads. Pick an option chain and watch the spread and how it moves and how the stock's moving before doing anything. Learn to understand how it's going. I appreciate that, Rick. Yep, and the strike. So just, always, before doing anything, always do it first. Watch it. Visually watch it. Understand what would happen if you bought here and what it would do and where your stops would be and how the stock moves and the options move with it. Okay, so an example of weekly options with a stop. This was Tesla from Wednesday and it was a scalp trade for me. So why did I get into it? The previous day it had closed above the 8-day and we had a strong open. So you see these nice big candles here on the 5-minute chart. By the way, I do most of my trading off the 5-minute chart, guys, and a 15-minute chart. I do go to a 1-minute chart to look at some things sometime, but I find too much noise. 5 and 15-minute charts keep me in the trades. 1-minute charts makes me too jittery. So back to Tesla. Quickly went long right in here on the weekly 340 calls at 91 cents, and I put a stop in at 0.71. This is a big candle. It shouldn't re-engulf that if this is going to work, right? Started to run up. I moved my stop because I was now making good money up to 99 cents. As we're getting into this candle and it was pushing, it was getting up above 325 towards 330. I tried starting to sell and I couldn't fill. I started lowering it, putting it in at the bid, and they wouldn't take it. And eventually that 0.99 stop that I had in place kept me from getting a losing trade because they would not take my fill. And you're going to find that when option volume is low or the market makers are really just don't want to take your order, when it's moving in the opposite direction, they won't fill you even if you try to sell at the bid. They will really try and screw with you. And that was the case here in Tesla. They didn't feel the need to take that order, so they kept not taking it. I had 4 times I didn't fill, and finally that 99-cent stop kicked in. Got filled right on that because it a little bit of bounce, and I was out. Had I not had that stop, I would have been hurting badly, and it did not bounce enough to ever get close to back to even. Yep, 50% stop, Naresh, on leaps, 50%. If your thesis is off and it goes down 50%, you're going to need a different delta to make it back. All right. Correct, Patch. It's also the brokers, but it's a combination. So you just have to, that's what stops will save you. All right, so that's an example of a scalp trade on Tesla. It was a winner, not as big as it should have been. Open interest definitely has more liquidity, MJ, and I do look at that. I also tend to trade options that have more liquidity, and they tend to be numbers like 330, 335, 340 on Tesla. The half strikes like 330, 250 never seem to have the same liquidity in them for whatever reason. Very rare. Good question. Okay, oops. Swing trade, Celgene. So this is another trade from this week for me. So why did I take a swing trade on Celgene? So it's been riding the 8-day. See the blue line here? Right? Nice riding the 8-day here, sticking to the 8-day very nicely. Nice flag formation after this move. 8-day is pushing it to this breakout here, this 135 breakout level where this candle is right here. 8-day is pushing it. IBB has a similar pattern and Celgene is best in breed. So I want to play an IBB breakout with Celgene because it's one of the better names. So what did I do? I did something uncharacteristically stupid on my part yesterday. I had been in Celgene. I got out the day before, 2 days ago, for a nice win. And with the news overnight of China allowing all these drugs in, I chased the open. I bought in the first 5 minutes, which I almost never did. I bought into the heights of this candle, the August 142.16 calls. This is bad, Mike. I make mistakes too, guys. Guess what? We all do. We all have emotions. We're all traders. So I chased this candle, got green, never put a stop in place because I like the pattern, and look what it did. Ugh. So was in pain, but I felt comfortable. So I went back to my chart here, and I put a stop in 20 cents below the 8-day yesterday, right here, right at that 133.67 area. Okay. Held through pain, was down about 500, 600 bucks on 10 options, wasn't happy. Today, popped on the open, stayed with it, came back in, got a little red again, but stayed with it because I had time. I had August. And then what happened? It took off in here, right? This is what I was looking for. So what happened when it took off? I started raising my stop immediately to in the money. Got to break even, put it right at the money, and covered my commission costs. This candle here, I saw it getting extended. It was getting heated. I took profits. So I was in at 216. I was out at 255, and look what happened. Great move, right? I got out of here because on a 1-minute chart, it was telling me it was overheated. It needed to breathe. Just like this candle here, I knew we were going to stop because it was overheated. It got heated here and pulled in. All right, so let's go on. So why did I take profits as well? Earnings are coming, guys. I do not want to be holding Celgene into earnings. No audio? I see audio. All right, I can buy it back if I get a clean signal. Can everybody, yep, audio's okay. Good. And today I never saw a clean signal in the action the rest of the day. It was never all that great. So swing trading, put stops in a support. I put it just below the 8-day because this is support. I like this setup. I may jump back into this tomorrow, especially if there's weakness and the 8-day moves up into it. Some of your questions you're asking is, I trade the 8 EMA and the 13 EMA on a 5-minute chart. 50 EMA is the purple line. The pink and red dots are the ATR trailing stop, and I had a webinar on that, and we'll go over that another time, guys. Today's about stops and some other stuff, but there is a webinar out there on that, and if you hit me up on email, I'll try to find it and send it over to you. If not, I'll answer those questions, Mike@alphashark.com. I've never had a lot of luck with trailing stops, Abdul. They tend to take me out when I don't want to get out of it. I'd rather watch the action and make the call myself. Just me, personal opinion, personal way I trade. No good answer other than that. I'm always going to be honest with you guys. Okay, so review of stops. One, they keep you from disaster. I mean, when you have an option that expires worthless, doesn't it, like, don't you hate it? I hate it. Drives me nuts. I try to keep that from happening now. It's a heck of a lot easier to manage multiple positions. Stops allow you to watch other trades or look for other trades, not worrying what's happening minute to minute with the trades you're currently in. That's important. You know, if you're going to have multiple positions on, you need stops in place, because what if the market pulls? What if there is suddenly a news that comes out and sends the market tumbling? Stops will help save you for that. Options allow for quick re-entry if appropriate. Unless you're in a small account, you're right, Elizabeth, you can go in and out of options really quickly and get back in. This is the beauty of options. And I will always tell you guys, think long and hard before holding options into earnings. Options for me are a crapshoot. If you don't mind taking that risk, just be prepared. Earnings are usually an all or nothing with options. Any questions before we wrap up trading with stops today and we move on to the rest of the market conditions, some other stuff, guys? Stephen, the market makers, there are people there, and they run it, and they're also done by computers. So the people bring liquidity, and they use computers to control it, and they run based off of algorithms and stuff that happens now. We could have a whole webinar on that, so maybe that's something we'll do later on. Okay, so let's move on. Let's take a nice look. So I hope you guys like that. I mean, this is, just try to start putting some of this place. It'll help you. Less smaller losses will allow you to move to keep your gains running more and let you look elsewhere and not feel bad about yourself. What BD do I use, MJ? I'm not sure what that is. What 8-day? 8-day. I use the 8-day AEMA. No, Roberto, I have some special sauce in that. Day trading options, I try to keep my losses under $200 mark. By the way, this will be recorded, and I'll be posting it on my Twitter feed later on when it's done processing. Oh, I use Thinkorswim, so you guys will be able to listen to this and watch it as often as you want. Okay, let's go over sentiment and the market conditions. Sometimes markets are tough. Maybe your stops are too tight. We'll have to take a look at it. You have to take a look at it for that. We do offer mentoring. I do that. So if something you're interested in, we can talk about that. Sentiment from bearish to bullish in 1 week, guys. So first off, we do this every week. The fear and greed index, we were 54 a week ago. We're now 76, okay? This doesn't mean that we're about to sell off, but it's telling us that things are getting heated and sentiment is getting a little bit too bullish in this market. I've seen it go all the way up to 100, so it doesn't mean we're going to stop here. We haven't been in this area in a while. We've been stuck around the 50 mark for a long, long time. So this is the first time we're getting a decent move in here. Something to keep an eye on. The sentiment from StockTwits, which I like to look at. SPY has popped up to 64%, not 70%, but it's getting close. What's interesting to me is the Qs are coming down at 69% when in the middle of earnings season. You would think that'd be rocketing higher based upon the action there. So a little bit of turn against some of the beta names here. And I put this one in today. We haven't looked at it, but the IWM, which is breaking out, just hit an all-time high finally. 75%, very bullish there. That's a little bit disconcerting with the IWM. So I'm not sure how much longer that one's going to be able to run for. We'll have to see how that plays out. Fear and greed is to the entire market. This here from StockTwits, you can put any stock in and get the sentiment on it for free, no charge. All the stuff I'm showing you here is no charge, guys. You can go out and get this stuff for free. I'm not trying to, advertise for somebody else. So the oscillators, you guys know I love the oscillators. The NYMOT, the New York Stock Exchange oscillator, plus 100. We haven't been up here for, better part of a month and a half. So we'll see how we handle this. I get very concerned when we get up above 200. So we still have some room to run here, but we're getting a little heated, and it's smart to show that they are starting to heat up there. The NASDAQ, the NYMOT, we're at 63, so definitely not nearly as heated here, and this one can definitely run a lot more. So earnings really start to kick in this week, so this is something I'll be keeping a close eye on and posting on Twitter throughout the week as they move. Just showing us that we're getting much more bullish in this market than we've been in a while. The VIX, by the way, this thing is unbelievable. We have had now 6 closes in a row under 10. Somebody was posting a stat that we've only had 4 closes under 10 in like the last 15 years or something like that. So kind of remarkable here. QQQ with earnings kicking in, we're at all-time highs. So all that weakness we saw in tech has been engulfed, and we are now at all-time highs here, riding the top of the Bollinger Band. We are a little extended off the 8-day, so we may need a day or two of rest as we go into big earnings week next week for tech. But overall, this still looks very good here as we're still moving higher. All right, so this played catch up in a big way. Bill, I don't know why you're not getting audio, but I don't know. Everybody else is, and I'm fine here. I'm hearing on my end. There will be a video replay you can watch. You can watch this afterwards, Bill. I'll post it on my Twitter. Options Mike. The SPX, I like to look at the SPX. Hang on a second, Bill. There you go. So SPX, RSI is at 66. It can go higher. And again, like the Qs, ever since we broke this downtrend, just in fuego now, riding the Bollinger Band higher. Still looks good, just getting slightly extended here. May need a day or two off here before we get there. What else we have? IWM finally broke out. You see this channel we've been in forever, finally took it out, all-time highs. Also the top in the Bollinger Band. I will tell you that this has room to run if it wants to go. It's been lagging all year long, but it's going to need either the financials, biotech, or energy, or some combination of them to really get going. So I would keep an eye on here. I don't play the indexes often, but this was one that I may look to go long on here at this point. All right. Who wants to go over some option flow for this week and see where we're at? I know you guys like doing that. Let me get Toss back up here. I had to do a quick reboot. For some reason, I had to download a piece of software and it's screwing with my computer. All right, you guys ready? So option flow that I really think is something worth looking at and still playable, guys. Let's start with Micron. Micron, you can see they've been buying this thing left, right, and center, but let's talk specifically about this week and what we've seen. On Monday, they were buying the January 18 calls, two big blocks. One was a sweeper. They purchased about $10 million of calls into Micron, the January 22s. They loved playing the delta, the deep in the money options on Micron. There was big buying there. They also bought the August 34 calls. And if that's not enough today, they came in and they were pounding on the July 28th 33 calls. And guess what? Nigerians picked up on that and they pimped that on fast money on the halftime report today. So Micron here on a daily chart looks good, poised to move, poised to run. I like this one here. I'd be looking to go long and play with this one with all the option activity and room to run back to 32.96 here, all-time high. Micron, I'd either play it with common Najis on a breakout, or I would buy August 33s here. I would not play with next week's options. I would buy more time. I have Trade Alert and I track it through that like just about everybody else does. JD, been a lot of flow into this. I did trade this one this week. On Tuesday, we had big call activity into the August 43s. You can see we had a nice move off of it. I did sell it at the end of the day. It did gap up and then quickly sold off on yesterday. They also went into the August 45 calls. And then today they came back and hit the August 45 again with size into the open, closed week, off the 8-day. This has been riding the 8-day. JD is another name I like a lot here. I would keep an eye on this one as well. I think this is good. BABA, guys, been tough trade when it goes. It gets choppy after it goes. Nice move here to 156. Back on the 8-day. This is worth a try here. And they did come in yesterday and they hit the August 160 calls for almost $1 million worth into it. So I would keep an eye on BABA, especially off the 8-day. It's been holding the 8-day. You're going to hear me guys rant about the 8-day moving average. It holds it. Look at how long this thing's held it for. Look at the option flow into this name. I do not think this name is done yet. Yeah, Patrick, I saw that. I still don't think it's done yet at this point. I agree that both Barron's article was tough on them. AMD, yes, Nourish, we could see a sympathy with that, but you could also try to play it up until then and see if it runs. I don't sell puts. Ramu. So I just don't do that. I just don't. I'm not comfortable trading with that. But if you wanted to sell calls against a common stock position, I do covered calls. Lee, we went over this. These are the ATR trailing stop. It tells me where resistance support are setting up on this on the for the day for trading on it. All right, more stuff. CRM. CRM saw a lot of flow this week. They came in hard again into the September 105 calls. They hit the November 97.50 calls. So they were very, very active in CRM this week, and it bounced off this and has run back to this area and is trying to break out and run to all-time highs here ahead of earnings. So this is another name I'd look. I will warn you, the options are tough in this name. You have to be careful with them. Yesterday I was trying to fill, and they wanted me to pay the ask, and I refused. So I did not get into this name. I'm not sure when the earnings are in Baba yet, Pratish. I didn't look at that. I'm not worried about them because they're not soon. Oracle, beautiful looking chart. Nice gap up on earnings. Came down, held the gap in the weakness, curling back up. And yesterday they were buying the September 55 calls with size. They were also buying today's expiration calls. I do like this setup here. Something to watch is going forward, as it's been basing now for a while and may be able to get another move on it. And I would look to play those September 55 calls they were buying. That was something I would look at here, or maybe something a little closer in the money to get better delta on it. Another name today they were all over was VMC on Wednesday. This was Wednesday they were hitting this. They came into the lows. Gotta love that. Stock came down, hit the 200-day moving average, buyer right here with size. They came in. One was a block of November 125s for about $600,000 worth, and then a sweeper of the November 125s, $1 million bet into it. Very bullish. Earnings are coming. That's the only reason I'm not in it, but somebody's defending and betting big on this name off the 200-day moving average right here. Again, guys, we've gone over this 3 times. This is the ATR trailing stop. It's a study that I have that I use to set up report and resistance, the pink and the purple dots. All right, we'll do a webinar on that setup again sometime soon. Promise you. That's okay, not a problem. What else we have? Qualcomm today. Guys, I don't know what to make of this, but if you like in long-term bets and you want to do something fun, Qualcomm had earnings. Earnings weren't bad, but they warned, right? So it got killed. First thing that happened early this morning, somebody came in. You can see them right here. They came in and hit the September 5250 calls, about 600,000 of them. And then they started buying the June 70 calls. And I'm not talking a little bit of buying. I am talking incredible buying into the June 70 calls. How big? This is 2018. 50,000 of them were bought by the end of the day. And we're talking sweeps of 3.3 million, 300,000, 50,000, 80,000, 150,000. This was, you see it right here, an incredible amount of buying long-term out in Qualcomm. I want to point out here on a chart for you guys, 70 puts it back up into this area here and fills this big gap. So it's just something to keep in mind, something to watch there. You don't see this very often. They're cheap options. I would take a chance on a couple of them and just see if it can work. Something I like and I'll be looking at here. Again, all the stuff I'm talking to you about today is stuff I think looks good moving forward tomorrow, or you can look to play in the near future. Not stuff that expires tomorrow, because guys, stuff expiring tomorrow is just it's a real gamble. SPLK, Splunk. They came after Splunk hard today. They hit the September 70 calls. I don't like this name for me. I don't like the way it trades, but if some of you like it, I think this is a good setup. You don't see a lot of call buying in this name often. No, Naresh. Qualcomm's been a downflow forever. I don't think it's going to hurt the other chip makers. Scott, Amazon, there was a lot of call buying in Amazon today, but it was all earnings based, dude. So nothing I could really sink my teeth into. The only thing I saw on Amazon, there was a September 2018 call buyer of size, but that guy was buying everything under the sun on that level. Delta. Earnings are over. I love when earnings are over. Guy came in today. Somebody was playing this one. August 55 calls, 600,000 plus of them, dollars worth of them, into weakness. Doesn't look good yet, but I'd put this in the back of your head, see if it holds the 50-day, and maybe try it off of there. See how it works. And lastly, I have a short for you guys. I don't, it's not that I don't like to short stocks, but we're in a bear market, so I'm not looking at it. That said, however, Harley-Davidson Hog, earnings bad, nothing really the last couple of days, and then this morning they started buying November 50 puts, 1.6 million, half million, 600,000, and then $2.5 million of them came rolling in to the November 50 puts. Put this into perspective for you. At the end of the day, 15,000 of these were bought. This is not normal. This is not protection. If there was cheap protection, it would be down. This was at the money. So if you like to short, 8 days coming down, this can't get going, that kind of flow, I might probably take a chance on that one and see what it can do. So that's what I have for unusual options for you guys as we move forward here. Hope you guys like that. Hope it's something you can help you trade with as we move forward. So I do want to talk to you about what I'm offering here, and we do have a special offering for you guys today. So you guys already know this, but I do my private exclusive unusual option mentoring and daily recaps. So every day, Monday through Friday, I do a video recap. It's usually 20 plus minutes long. It goes over the state of the markets, what I'm looking for the next day, stocks I like, and the option flow of the day and what I traded, and what I'm looking to stay in and what I'm looking to buy tomorrow. Gives you lots of ideas on what to pick up and what to trade. Every Thursday at 6, we do a weekly mentoring webinar. We had it tonight. We spend a half an hour, sometimes a little longer, going over your questions, setups, more details, in-depth information to the markets. If you have positions you're not sure about or you're having issues with, we could talk about what you can do or what I see going on with them. And then we do third Saturday every month a boot camp at noon Eastern. These are an hour to an hour and a half long. This Saturday we did a technical session. We went over technicals and how to identify technical setups and stock patterns. We go over how to trade options. We do all sorts of things. So this is a lot of value right now for this. For today only, for the near future, right now, for this week, we're reducing it to $49 for the first month, $99 for the next, for renewing it that month. This is a special offering for summer only, guys. So you get everything included in there. When you go to this page, alphashark.com/bestcoaching, it's going to look like that little screenshot I have up there on the screen. So you'll know you're at it, you know you're hitting it correctly.
I'm going to jump on here for
AAK, is that you?
Yeah, hey, what's up?
Hey.
Okay, so this is kind of something we run the trading room. The trading room runs from 8 a.m. Central to 3:30. And the biggest question we have and the biggest complaint we have is, the trading room is great, but most people aren't at that level where they, feel comfortable trading. The trading room is really for, pretty advanced active traders. So if you guys are not at that level yet, what we are offering you guys is coaching from Mike. So what you guys will get for $49 for the first month. So what I would say is just, try it for a month and see if you like it. And if you don't like it, you don't need to renew it, but I think you will like it. So you'll get a daily recap video. So every single day, you'll get a daily recap video from Mike talking about the unusual option activity and the order flow. You'll get a once a week private group mentoring session where he'll go over, very similar to what he came over here, how he trades in his trading style, and how you can use that and implement that in your trading. And then once a month, we do a Saturday boot camp. So you're getting about 3 hours of private mentoring, private group mentoring with him, plus a daily recap video here for only $49. A lot of you guys, I would say there's 4 levels as a trader. Okay, I'm at level 1 where I hopefully consistently always make money over time, but a lot of you guys are not there. So if you guys are not there, then you should probably get in. So make sure you guys sign up. Me and I actually had to talk to Mike and make sure it was okay to offer this price point because, I mean, for $49, you can't. I was betting. I was at the Del Mar opening day yesterday. Every bet was $60 a race. I was betting. I was doing exact $5 exacta box. It was $60. So for $49, guys, there's no really downside to this. If you're not at where you want to be in your trading, if you're confused, if you need some coaching, okay, Mike is our #1 coaching and educator. He's taken over the reins since James left. Make sure you guys sign up. So what you'll get, daily video recaps. So you'll get 22 of these in a month. You'll get 4 private group mentoring sessions every Thursday for about half an hour, and then a boot camp once a month on a Saturday. Last time I was on technical analysis. So make sure you guys sign up. It's alphashark.com/best coaching. I'm going to pass it back over to Mike, and then we'll see you guys. I'll see you guys in the trading room tomorrow morning. But if you guys are not where you want to be in your trading, if you want coaching, if you want guidance, we really don't do this at all. Most of our stuff, the indicators might include like a session or two, but this is ongoing education to get you guys where you want to be in your trading. All right, thanks, guys, and Mike, it's all yours.
Thanks, AK. All right, guys, I got a couple minutes. We only have time for a couple charts, so we're going to go over a few of them real quick. Netflix, where do I think it's going here? Ultimately, I think it's probably going higher. Twitter account is Option Mike, @Option Mike. There you go. Okay, so ultimately I think it's going higher. It's a nice flag here. It's extended. We saw this in NVIDIA though. It can run. So, watch the action, watch for option flow and see what it wants to do here. But ultimately I think it's going to catch up and play catch up here on Netflix. There's been a lot of, the last couple of days, it's hard to tell what's going on with Netflix because there's a lot of rolling out. So give it a couple of days, see what it does, but it looks great up here. Twitter, ultimately, I think it can go to my target 3 here, which is just above 21 before earnings. And then I don't know, Pratish, okay? Then we have to see where it goes from there. You got that big gap here. If earnings are good, it's going to explode into this gap, guys. If earnings are okay, it probably hover around in this range. And if they're bad, well, it's probably back down to 15 or 16. That's how Twitter trades. Facebook into earnings. Facebook here for me, guys, it's had a great run. I wish it had closed weaker today than it did so that we have a better buy-in point. It's extended off the 8, the 21 days all the way down. It may run a little bit more into earnings, but I'd like to see it go a little sideways and cool off before it goes there if we can get it. It's had a big run here, so hard to chase up here. Amazon, they bought it all back, MJ. So just to give you an idea, Amazon, that weakness was all bought back today. CMG, Patrick, great question, bud. I was looking at this today, big move down, and let's go to open it up, see if we get here. So right now, it's at support. Can you see that? Let's go to a weekly. Nice, guys. It's at support. Right here, you can see it's hit it a couple times. This area is support for it. It has earnings next week, so it's extended down. It's had a huge drop here. I don't know if I'd be looking to get much short here at this point. I'd actually be looking for some type of reversal tomorrow, maybe goes down a little bit and reverses back up and get a little bit of a bounce play ahead of earnings, but not much. If earnings are bad then, and at this point, I'm looking 300, perfectly honest with you. I think 300 is an area where I'd look to see if we can get long for a swing on it. Nice job. Yep, I used the daily, Lawrence. But I used the 5 to enter. That's exactly it. Sorry, Scott, I closed it. Qualcomm, it was the June next year, 70 or 75 calls. I don't remember. Let me see if I can find it. Hang on, now you're making me feel bad. Qualcomm, it is the June 70 calls, 50,000 of them. Hog, I'd probably trade the same strike here, David, because that player is looking for something then. Or you could sell a call spread against it. I agree. MJ, I do like GS here. I'm not ready to give up on it yet. I'm not long it yet. But the reason is every time this hits the 200-day, it's holding. What did it do here? It's holding the 200-day and the 50-day. So this is something to look for. Arthur, was recorded and should have been emailed out for you. If it wasn't, email me and I will send you the link. So I like it here until it breaks this area on GS. And the other reason I like it, perfectly honest with you, while the banks have been out of play, there's still the XLF is holding the 8-day area still. So it's not ready to give it up. We're going to do 2 more, guys, and I'm going to run. Baidu, yeah, Baidu has a nice look to it. But earnings are next week, I think. And unfortunately for Baidu, it's really going to take earnings to go. I don't have my stop. There it is. Do I have my chart? Where's my chart? There we go. So Baidu, yep, nice and coiled here, coming out of this pattern, real tight. I like it as well on the weekly chart. NVIDIA, I love how NVIDIA closed today. I love how tight this thing is. I think this thing is ready to take a run and go above all-time highs. So it's been playing with these level here, very tight, holding the 8-day here since it broke back above it, tight and coiled. I think it's ready to go. I'd like this one a lot. I keep an eye on it. And last one, MGM, guys. Last one for tonight. MGM got a big pop yesterday because it got added to the S&P 500. Somebody bought options into the close. Somebody knew about it. At this point, there was call buying today. It's extended. It has earnings next week. I don't know what to make of it. Guys, I appreciate you joining me. Have a wonderful night, a great day. Remember, OPEX tomorrow. Be a little careful. Things will be a little bit whippy, especially in the morning. We tend to get cleaner moves in the afternoon on OPEX. alphashark.com/best coaching. Sign up 1 month, $49. Great deal out there. You will not be disappointed. Have a good night, guys. Everybody be good.